Hey traders, this is Scott Barkley with ProAct Traders, and I do a lot of videos to help retail traders get better, and just finished this one, so you might want to take a look. Keep them nice and short so they're understandable, digestible, and they really help you. I'm the author of the Empowered Forex Trader, Strategies to Turn Pains into Gains, available on Amazon. Have 24 years experience trading and training in the Forex. So maybe I got something that's worth listening to. Hope this helps you. We handle whipsaws in fundamental announcements. Well, before the fundamental announcement, you have to decide what is the current structure. So you can see here pretty quickly that we have a flag pattern. Now, a flag pattern typically means however you got into the flag is how you're coming out of the flag, okay? So they begin the process of setting that agenda right in here, okay? They're setting the agenda for FOMC. This is FOMC, this big spike to the upside, all right? So as we go forward, we see the spike happens, okay? Then it whipsaws right straight back down and goes back down here. Now, the situation this week was FOMC, and then we had unemployment, okay? So unemployment went to the downside and whipsawed immediately, all right? Now, the reason for that is that the market is trying to keep the structure that is in place. All right. So the original structure was what? An up move right here, with the target being up here at the 2.618. All right. So it whipsaws in FOMC, comes right back to where it was. Whipsaws in the unemployment figures. All right. And it comes right back to where it was. Okay. So now what are they going to do? Well, now they're working their way back up. You see, what ended up happening was that, as you can see here in this instance, you've got really now a pretty good channel working to the upside. Now, this is Friday, so what you're seeing here is squaring up. The market has these are the bankers coming out of the market. Okay, they've been actually trading up all week, and right now they're exiting the buy. So are all the speculative traders and everybody, because nobody wants to stay in over the weekend. All right. So what's the lesson here? The lesson here is, first of all, stay out of fundamental announcements unless you absolutely just love to be beaten up. And number two, expect a whipsaw, right? So never take a fundamental announcement unless it continues the structure that's already in place, okay? So in the case of the FOMC here, we could have traded the FOMC to the upside if we're so inclined, okay? But we would not trade the dollar index to the downside. The only way you trade the dollar index to the downside is it whipsawed back up, came down here, and then continued the move to the downside, because what that did was set the new channel to the downside. But the structure that was in place from the start, they continued, as you can see, right? So the lesson is, never take a fundamental announcement unless it continues the structure that is already being told to traders in the charts. Hope that helps you.